In today's video, you'll learn about social impact investing and its benefits to your business. We explore how to put this on your company's radar and implementation. Let's make a social impact.
Hi everyone, I'm Carl. Welcome to the Social Impact Show, a channel where you get the latest strategies and tips to help you scale and grow your CSR and goodness programs. So my guest today, her name is Annie Seelaus. She is the CEO of Seelaus. And today we're talking about impact investing. And so I guess, Annie, just to take it all the way back to the beginning, what is impact investing and what's your philosophy on it? And what is, I guess, the philosophy at Seelaus?
Yeah, Carl, thank you so much for having me, and thanks for highlighting this really important topic. I think it is a real moment in time when impact investing is kind of front and center and people have evolved in their way of thinking about it. And it's really moved from kind of a very niche thing that corporations are thinking about doing to something that can overlay a number of different businesses and really help companies align what they're doing financially and in the financial markets with their value system. And that's really exciting. I think that there's been so much innovation in the investment space that's allowed companies to find ways to do it without really any concession on their objectives around their investment portfolio. So at Seelaus, we're thrilled to be a part of that. We're thrilled to be part of that innovation. We partner with a lot of companies across a lot of different verticals to align their markets business, their activity in the market with their larger social mission. And that can be ESG goals for companies. It can be very, very specific communities or organizations they want to support. It can be all of their DEI objectives as an organization. Really, there's no limit to what you can tackle in terms of an overlay you can put on your investment portfolio that aligns it with your more mission-driven objectives.
Can you tell me a little bit more? So, for example, let's say one business wants to invest. When you mean impact investing, is it one business investing in the social impact programs of another? Like, can you break that down a little bit?
Yeah, so it certainly can be. And I think there's a couple of different ways that impact investing touches most companies, right? And that can be through, a philanthropic arm, maybe a foundation that's related to a company that's doing grant making. It can be through their pension fund investments and having their pension fund be invested in impact investments. And then most recently, a lot of innovation and where we connect to companies a lot is in kind of this cash with impact idea, this using your balance sheet cash as a way to really drive impact. And create some meaningful generational change. So it can really mean a lot of different things. I think one of the evolutions that we've seen is a move from a very sort of specific project-based, illiquid investment in something that would have impact towards being able to be impactful with everything on the spectrum of making investments. So like I said, right now we're partnering with people on their cash. So it could be bank deposits, it could be money market funds, it could be real short-term cash holdings that we partner with companies to use to be impactful, all the way out to maybe a grant-making activity or a direct lens situation into an impactful project, like maybe building solar panels in a community or a new housing development or something at that end of the spectrum.
So I guess over the past couple years, you've probably seen this, and I think most of our audience has seen this, is the evolution of how people see, or the public perception of ESG, diversity, equity, inclusion. Has that impacted the type of investment that companies or people have done? Because, for this show, whenever we put out any content about ESG, DEI, or anything related to social impact, it's very, very polarizing. So have you seen that in the market?
Yes, I think it's a tricky climate to be discussing these things, and especially in an election cycle when everything's a little bit heightened. And my fear is always that people will pull back from pursuing some of these impact objectives because of that sort of fear of the backlash, or is this not something we're supposed to be talking about? That's a little bit the negative side, the idea that maybe you have to pull away from doing anything in this space because it's broad. I haven't seen too much of that, luckily. What I have seen on the positive side is a move towards really making sure your impact investments are having the impact that you say they're having. And what I mean by that is a lot more transparency around the impact side of the investment, a lot more authenticity around the investment. And I think that that's, a great thing. I think that that only leads to a bigger, better opportunity set for all these impact investing projects to have that light shine. And then, of course, everything in between. And I've certainly heard of some companies saying, well, we're still going to do the same program, but we're going to rename it, right? So that maybe it doesn't fall under the header of something that would cause negative attention. Look, anytime I think an area in the investment world or in something that's maybe a hot political or social topic, anytime something like that has enjoyed sort of enormous growth, there always comes a moment of that scaling back and that reset. But ultimately, I think it'll be good for the space because I think it will weed out, those projects that maybe didn't have the authentic impact that people said they were having. One thing I think that's really important for people to understand is that the impact investing that we do here at Seelaus and that we talk to companies about a lot is not concessionary in any way. We are not asking people to take a lower market rate of return. We're not asking them to change their investment policy statement. We're not asking them to alter their business objectives. So, for example, if you want to do something impactful with your balance sheet cash, but that needs to be incredibly liquid and accessible to you at any time to get back, we're not going to change that. We're just going to show you that it can be impactful at the same time. And I think that the more those opportunities exist for impact investments to not be concessionary in any way, the harder it is to really scrutinize them or pick at them or say that companies shouldn't be doing them because there's really no argument against it, right?
In a previous interviews, we talked about outputs versus outcomes. And I think what you're talking about is there's more people focused on the actual, like you said, the impact or the outcomes rather than the outputs, right? So it's like, oh, you got this business doing this many hours of volunteering, this amount of payroll giving, this amount of investing. But hey, did your program or the programs we're investing, which I would imagine people and businesses want to know, did they actually have a community impact? Did they impact the audience or the nonprofit or the cause or the community that it was targeted towards? And sometimes it's hard to measure that.
Yeah, no, I think you're exactly right. And I think that that's why there is a movement towards the more measurable ones. I think especially for people within corporations that are struggling for internal buy-in, I think that they are gravitating towards the most transparent, auditable impact. And that's okay. I think that that's important. I think the other thing that I'm hopeful of is that people continue to understand that the impact that you can have on a community through investment activity, you're not going to get it right necessarily right out of the gates, right? And so as you start to formulate an impact investing approach, there is a little bit of trial and error. Did this have the impact we thought it was going to have? Is this truly aligned with what we were trying to do? And that's okay. And I always fear that some of the backlash or the headline risk around impact investing, ESG, DEI, will make people shy away from that. But I do think it's the trial and error. It's the evolution of the ideas where we get really kind of lasting change and we start to zero in on what's having the impact. But sort of that, I fear that, there's that initial, oh, this didn't have the intended impact, let's not do anything. That's what I hope is not always.
Well, I agree with you, right? Because there's that negative public perception or that polarization of certain keywords. But I think there is still good to be done, maybe just not in the way that the perception is. So it's a very interesting time, especially like you mentioned in an election year, So can you tell us more, I guess, about what Seelaus is doing and what's your philosophy on impact investing?
Sure. So where we focus is in the really, really liquid asset classes and the more liquid conservative parts of people's investment portfolio. And what we've tried to do is say, hey, you use money market funds, you can invest in money market share classes that give a specific amount of the revenue of their share classes out to nonprofits that align with your company's goals and values. So at Seelaus, our money market fund share classes have a 10% revenue that's committed to just going to nonprofits that support educational opportunities for women, for example. And that's a really cool thing. People use money market funds all the time in their cash management. They're doing it anyways. These are competitive rates. These are market rates of return. But to be saying, hey, this portion of the fees I'm paying to be invested in money market funds are going directly to nonprofits, incredibly auditable, right? And a very, very simple solution. Moving out the spectrum a little bit, we partner in other short duration asset classes. So for companies that use maybe 1 to 5 year duration investment vehicles, and whether that's, for their cash management or maybe it's in a pension fund or foundation, we align those portfolios with their impact objectives. So we have a number of assets under management where the management fees on those assets go to fund an analyst class here for young women from underrepresented demographics. Or we have portfolios we construct that are comprised of impact loans. So loans out, housing loans out to communities that are underbanked and they wouldn't otherwise have an opportunity to own a home. And we try to identify what are the communities in need and how do those align with the companies that we work with. Maybe it's where their headquarters is. Maybe it's where their workforce lives. And those are the communities they want to be supporting. So really, really simple solutions from our perspective. We've tried to stay in places where the asset class or the investment already exists in the investment policy statement for the corporate. And so getting internal buy-in again is not as difficult because it's already a place that they might be allocated to. And this is just an impact overlay. One of the interesting things is, and I'm so happy to have the opportunity to be speaking to your audience, often CSR teams at these companies don't even know how impactful their treasury teams are being through the market. And that's a disconnect that we try to always solve for, because we often say to our treasury teams, look, when it comes to supplier diversity, you're working with a women-owned financial services firm. You should be talking about that internally and the impact of that. You're using our money market fund. That's a hugely impactful thing. You should let your CSR team know. And is there a way we can bring those two sides of the business together and really align the whole picture? It's a little bit of a best kept secret within some of these companies, and it really shouldn't be, because I think when it comes to recruiting and attracting talent, retaining your talent, it's important that employees know, how much companies are doing to really move the needle and be impactful.
So how would somebody in the CSR space or CSR team on a business, how would they go about floating the concept of impact investing first? And then how do they go about, creating those relationships with those internal corporate departments to start making those explorations? I guess and then part two of that would be, how would they start working with you?
Yeah, no, I think, so we attack it from both sides. I always tell CSR teams that we're connected to that they should connect directly to the treasury team at their company. So many treasury teams are already thinking about these initiatives and already exploring them. So I think most CSR teams will find that the treasury team is further down the road than they think on this conversation around impact investing. But just sort of closing that internal gap of having that conversation between treasury and CSR, I think is the first step. And then to the extent that treasury isn't looking at this yet, but the CSR team wants to introduce the idea, I think what we try to do is provide a lot of education on the topic, right? So from our perspective, whether you do it with us or someone else, it's important to be thinking about. So we try to provide the full spectrum of information on ways you can invest with impact beyond just what we offer here at Seelaus, and just sort of get that conversation rolling. But what we find is that the CSR teams have fewer hurdles to clear because, again, they're not asking treasury teams to do something that they're not already doing. This is about saying, let's take everything you are already doing, and is there a way to do it in a more impactful way that aligns with our mission as an organization? So for us, we partner on both sides. I think when we work with treasury teams on their DEI, ESG objectives in the market, it's incredibly exciting. It's innovative. Some of the coolest programs and the most impactful things that we've done have come through that direct collaboration with treasurers. And hey, do you think we could try this? Would that work? So that's a really exciting dialogue. But I think connecting to CSR is equally as important to us because that idea share that exists in the CSR community is so energizing. And it's so great to hear about, organization initiatives that each company has that are really being dictated by these incredibly thoughtful CSR teams. And how can we share that with other corporate partners, or how can we maybe make that connection for Treasury? Hey, your CSR team is already so invested in this community. You could align your portfolio with that.
I mean, as you know, a lot of CSR teams, social impact teams, they're overworked already. They have so many things that go on for them, right? ERGs, right? Getting those measurements, like even getting buy-in for some of their programs. So do you have any strategies on how they would get buy-in if impact investing isn't even on the radar for the company?
Yeah, so I think it's leverage all the work that's already been done. I mean, one of the things that has led to the growth in our impact investments here is corporates talking to other corporates. And that's really cool. We've had corporates who have invested with us offer to call their peers and say, we'll talk through what we did and how we got through it internally and the hurdles we faced and how we got around them. Let's share that so another company doesn't have to reinvent the wheel. So that's really exciting. I think also for CSR teams, which is incredibly leverageable right now, it's becoming so data-driven, which is fantastic, but there's so much access to just the numbers, how impactful these programs can be, how auditable that impact is, who else is doing it, how many assets each of these things have, who are the people you can partner with if you want to do it. And I think that that's a really leverageable thing. I think a lot of the work has been done.
Awesome. So I guess, Annie, we can talk about this for forever. But if our audience wants to connect with you, learn more about Seelaus, any reports or things that you're doing around impact investing, what's the best place to reach you?
I'm happy to share my email and happy to share my phone number. I do have somebody who heads up CSR here for us, Bridget Renzulli, who's fantastic. She's another point of contact. This is a topic that we're incredibly passionate about, and we are happy to answer the most basic questions, provide all of our materials. And like I said before, happy to share other providers who do different types of impact investing from us. We have incredible partnerships within the space, and we think it's just something people should be doing beyond even just hoping they partner with us.
If somebody wanted to get started personally in impact investing, what's the best place, best resources to start?
So I think if somebody is interested in it on a personal level, you can do it in almost any individual investment portfolio with almost any provider. You just have to know what to search for. So when you as an individual are approaching your own portfolio, if DEI is important to you, screen for working with diverse asset managers, right? That's a really easy one to do. In your equity portfolio, if you want to lean into companies that do social good, there's a number of social scoring indexes, and you can sort of see how a company rates and decide to invest or not in them. You can do negative screens. You can tell an investment professional or do it yourself and just say, I'm going to avoid companies that do X, Y, and Z and set those targets for yourself. And now, which is really exciting, is that a number of what are called like direct lend funds are opening up to allow individual investors to participate. And that's real project-based lending into communities, into very specific, impactful projects. And I think technology has made that really accessible to individual investors, which is really exciting.
Learn about other social impact disruptions by watching this playlist here. Thanks for tuning in. We'll catch your next episode.